Risk assets are selling off on Tuesday, April the 30th, ahead of this week's Federal Reserve meeting. Bitcoin is taking the charge on this decline. Bitcoin is currently down about 4% on the day as we speak today, intraday. What is going on? Bitcoin has not had a very good month. We're going to be talking about what's next with our next guest, who is an expert on Bitcoin and blockchain. He is Jake Boyle, CCO of Caleb and Brown. We'll be talking about Caleb and Brown and their projects as well. Welcome to the show, Jake.
Thanks for having me, David. It's good to be here.
Jake, Bitcoin has had the worst month since 2022's bear market. What is going on? Is this the end of the bull rally that we've seen over the last year and a half?
Look, what we find, David, is that with investors, when things are looking good, everyone's positive. And the second that things turn south, it's Armageddon, end of the world. The reality is, when you zoom out a little bit, Bitcoin has had its worst month in quite a while after having several of its best months in quite a while. And the other thing we need to remember is this is a post-halving environment. It's not uncommon for Bitcoin to have these drawbacks after reaching all-time highs. The narrative is playing out as many would have predicted in many senses.
If you take a look at the historical charts, so you brought up history, every single time in the past couple of cycles when Bitcoin has hit a new all-time high, it's had a tendency to correct about 40, 50% on some occasions. We haven't seen that yet. Is this the beginning of this kind of decline up to about 40%?
On my end, I don't think we'll see a 40% decline. The rationale behind that being this is the first market that Bitcoin has been in where we have had the degree of institutional support behind it. So whilst history sometimes has a tendency to repeat itself, what's critical to note is that the variables and the landscape is different. Bitcoin volumes this halving are not the same as they were the last or the one before that. And we certainly don't have the ETF support, which gives us that kind of that optimism at a larger scale. So I think we'll have our drawdowns, which we've had, but I'm more optimistic than I was, say, last cycle round.
And you brought up post-halving as a kind of era. What does that mean for the Bitcoin price when you're talking about what comes after the halving? Historically, how has Bitcoin performed post-halving?
Yeah, so on our end, we trade hundreds of different coins for clients around the world. So we've always got an insight into what client behavior and sentiment really is, particularly for the higher net worth clients in the space. And what we've seen cycle after cycle is Bitcoin reaches these highs. Life is perfect for everyone. There's a huge correction and everyone freaks out. A lot of the, for lack of a better word, dumb money leaves the market, and a lot of the smart money gradually accumulates and has more of a longer outlook, a long-term investment thesis. And when we support this thesis, we often find Bitcoin will rally again. It tends to rally again. Usually it happens about a year after the halving, and then it hits new highs entirely after having that sustaining a drawback. We then see that other altcoins, blue chip altcoins, if you will, tend to absorb some volume and start to perform quite well. Ethereum, most notably, which categorically hasn't really done that yet. It's been drastically outperformed by Bitcoin. And then, of course, the final stage, which we may see potentially later on, is when the alt market gets a lot of new capital inflows and performs very well. So I don't think we're going to be that drastically different to any other cycle. I just think it's easy to talk about history because there's no emotion involved. But when you're in the market yourself, it's a very different story.
Jake, let's talk about the other cryptos and then finish off on Bitcoin. The altcoin market has, in many regards, somewhat lagged behind Bitcoin initially, and then we've seen an altcoin explosion with the meme coins. So based on your client interest, where are they positioned? What are they most interested in right now, the Bitcoin market or the altcoins?
Great question. It's a combination of both. And a lot of our clients, they recognize that the narratives in the industry change and you can't be emotionally tied to any of your investments. And we've seen people being burnt when they try to do that. You don't want to hold an altcoin for multiple years in a row. What we've found recently is there has been a lot of meme coin hysteria, and we on our side have seen a drastic increase in transactional volume in a lot of the more notable meme coins. Now, as much as that might, keep a traditional investor up at night and give them a brain aneurysm, the reality is that clients follow these narratives and they want to capitalize on these quick wins. What we have seen, though, is a lot of our clients have rolled a lot of those meme coin speculative gains into more sustainable long-term assets. And that's where Bitcoin does always tend to find itself a home.
Bitcoin dominance is currently at 55%, up tremendously since the beginning of 2022, which was at 41%. Basically, all this means is that Bitcoin now occupies more than half of the total crypto market cap. Do you think this dominance will continue rising?
I think the dominance still has a bit left in it. I think it will continue to rise over the course of the year as Bitcoin recovers from this sell-off, which I don't think is going to sustain itself for too long. Once it recovers from that sell-off, I think we will see history repeat itself. I think that Ethereum will start to absorb a lot of dominance and the alt sector will increase. However, given how much institutional support surrounds Bitcoin in this present time in the market, which we did not see 4 years ago, 8 years ago, anything like that, I do think Bitcoin dominance will stay particularly high throughout the years to come.
All right. Well, nobody knows the future exactly, but I would like to talk about price levels with you. You have a unique insight as to what clients or retail investors actually are interested in because you work in that field, and we'll talk about Caleb and Brown in just a bit. But have your clients told you or have indicated to you at what price level Bitcoin they would get in? In other words, if Bitcoin falls another $10,000, everybody will rush in to buy. Is there such a price level for you?
Yeah, definitely is. We find that most investors, people have these psychological numbers that they work with, round numbers, if you will. So a lot of people want to one day sell their Bitcoin for $100,000. And a lot of clients right now have layered limit orders around the 60, 55K range. So the general consensus on our end is most of our clients are expecting and have been expecting this sell-off from the 70K highs, but they're not putting in limit orders at 30K as an example. It's healthy, 50 to 60K kind of range, and a lot of which have actually hit overnight in that case.
So what is the floor for you think?
In terms of, we have limit orders at practically every price for every coin you can imagine.
Sure.
But generally speaking, the majority of the volume is tied around $55,000 to $60,000 right now on our end.
Very interesting. And what about the upside? Have you heard any predictions on what could be a reasonable year-end target? I'll give you some examples. I mean, Standard Chartered Bank upgraded their forecast to $150,000 by the end of the year. A few other notable institutions as well have been very bullish. These are mainstream Wall Street institutions as well. It's not just retail investors making projections. It's large institutional investors being very bullish. Where do you stand?
Yeah, I certainly agree with those claims. I'm personally very bullish. I've been full time in the market since 2011, and my conviction has not changed all throughout. I think that what happens is we have these psychological numbers, and once we break through those prices, we unlock a whole new territory of price discovery for the asset class. Now, we've seen that time and time again with Bitcoin. It was $20,000 for a while. A lot of people watching will remember $20,000 Bitcoin there were memes about it. Everyone was talking about the day we'll break it. And then the day we broke it later that year, we more than doubled it, and it seems so seamless. And now $20,000 Bitcoin seems like a hell we can't even imagine. So on that note, I think we'll smash through $100,000. I think there'll be a lot of sell-off around that point. It's a psychological number, but I can see us reaching $150,000, not right away, but over a year or two to come.
Well, why do you think Bitcoin has had a hard time sustaining above $70,000? The price has breached above $70,000 on a few days, a few occasions, but it wasn't a sustained momentum. What's up with that?
Yeah, no, it's a great question. I think that a few things. 2024 has been such a fantastic year. The news headlines for Bitcoin have been unsustainably positive. We do need to see a correction in that. And the ETF hysteria, the classic buy the rumor, sell the news. It comes out, we get those inflows, and at some point, profit taking does become a subject that people will consider. The other thing we need to realize is, and we need to drop our biases here as cryptocurrency investors. Cryptocurrency is a high risk asset class. That's just a fact of the matter. And in times of geopolitical uncertainty or broader economic uncertainty, particularly in the States, which drives most volume here, the reality is we will see a sell-off. And we've seen that. If investors have made a fantastic profit, we're around tax time in the US too, where people have got to harvest some of gains, harvest some losses, move assets around. It's natural that we'll see that consequential drawdown.
Overall, then, what are you looking forward to in terms of use cases for blockchain and cryptocurrencies?
That's an awesome question. I think one thing people don't talk about as much these days is just the DeFi sector as a whole. I think that we've seen a lot of collapse over the last few years in centralized lending platforms. One thing we need to remember is a lot of decentralized platforms remained unharmed throughout the whole FTX saga. And I think that as the industry evolves, decentralized platforms and that peer-to-peer trust will become another driving narrative in the space. Gaming is another sector that our clients are obsessed with. How gaming and blockchain integration can help with that new age of how people interact with one another using better technology sources. And then, of course, most critically than anything, perhaps, is really the use case of Bitcoin in and of itself. Now, a store of value seems to be the narrative that's driven the last few years of growth. Beyond that, in terms of day-to-day transactional adoption, whether that's Bitcoin, whether that's other cryptocurrencies, whether stablecoins see a new age and that becomes the talk of the town, well, they're all the kind of things that I'm excited about, and some of them will come to fruition and some of them won't. And then, of course, there'll be new narratives that come along the way too.
I spoke to a trader recently who prefers the altcoins, specifically a few projects in the altcoin market, and he favors those particular projects over Bitcoin because he believes that crypto for him is a technology play. It's not a money play. He thinks that Bitcoin is, in his words, the AOL of the crypto space. It was the first of its kind. Now it's old and outdated, and there's a lot of other protocols out there that can do what Bitcoin was designed to do, which is a peer-to-peer system, much better and faster and more efficiently. So Bitcoin is just outdated tech. He's not in that space. What do you stand on this debate?
Yeah, I mean, look, everyone's going to have their opinion on Bitcoin, and particularly in times like this. Look, there is a lot of value in other altcoins, and I'm sure he has some great cases of altcoins that are solving tremendous problems in the ecosystem. When it comes to Bitcoin specifically, I think it's pretty critical to note that Bitcoin right now is in a difficult spot because of its price action, but also because the reality is that the block reward is halved, which from an infrastructure standpoint means that the scalability of Bitcoin is largely dependent on its positive price action. And if it's not dependent on that, then we need to have greater energy efficiency and technological efficiency for those mining Bitcoin. So right now, Bitcoin is really being put to the question. So naturally, a lot of conversations will come about saying, oh, but Ethereum provides this and Solana provides this, and every other altcoin will come to the table. What's critical to note is that all asset classes and all innovations over time have to go through periods of being tested. They have to have these constraints. And over time, these things improve, and there's room for several winning assets in the crypto space to provide value, not just Bitcoin. They might just be solving different problems. That's all.
One of the common misconceptions, since you brought up the halving price, is that because miners now have a higher cost to mine post-halving, because the block reward is reduced by half, if more miners come offline because they couldn't sustain their economics for whatever the issue may be, we could get fewer supply of Bitcoin. That's a misconception. Can you address that?
Yeah. So look, supply and demand principles impact Bitcoin in a very rudimentary sense. At the end of the day, we have an increased a supply that enters the market. What miners do with the Bitcoin that they've mined, whether they're longing those positions or selling them off, that's an ever-changing attitude. These are large corporations typically, unless you're the one individual who managed to, on his own, mine and win an entire block the other day, which is a cool story. But fundamentally, we have a ratio of new Bitcoin entering the market relative to Bitcoin, which is bought up by ETFs. That over 2024 has sustained a lot of optimism, and now that might be changing. But these are just the natural things that occur in a market cycle like this with supply demand economics.
Now, what about the argument that Bitcoin is a store of value? Now, we go back to the debate of what to do with Bitcoin or why one should invest in Bitcoin. So if one doesn't believe that Bitcoin is a technology play, then could one use Bitcoin as a form of money, a form of savings, a form of wealth preservation? Does that make sense to you, Jake?
For sure. I mean, the fantastic thing with Bitcoin and cryptocurrencies is that there's a real sense of fiscal liberty that you have there. The way that you can own and move these assets is like nothing else. We're not sending wire transfers across the world with exorbitant fees. I can send you Bitcoin right now, David, and then you can have your thesis on what you want to do with it. And that's what we love with our business. Our job is just to empower people in whatever their investment thesis is and give them the security and support to work throughout a rather choppy nascent asset class. Now, we have tons of clients who say, Jake, I just want to hold Bitcoin the same way I hold my gold. I see it as a digital gold. That's a narrative that all of us have heard several times. Now, for those investors, that strategy has worked out well because historically holding Bitcoin for long durations of time, as we know, performs exceptionally well. In saying that, we work with clients who operate businesses that actually accept, send, and receive cryptocurrency as a means of payments. and they have Bitcoin often as one of their preferred currencies. We have seen a steep rise in stablecoin adoption in that sense. Ethereum, Solana, notably, also take up a lot of that. But I think at the end of the day, as long these assets will set out to solve certain problems, if the investors and the consumers find that it solves alternative problems to what the original white paper may have laid out, I don't think that's inherently bad.
What is the rough breakdown uh of let's say Bitcoin versus stable coins in the form of payment? Like roughly how many people use Bitcoins versus how many people use stable coins for their B2B transactions?
Well, I don't have the data collectively on it. Internally, what we see as a business is that there is a higher percentage of clients who make business settlements in stablecoins as
Right.
opposed to
Sorry, I, I
Bitcoin.
I didn't mean the exact number. I just meant like, which one is
Which
more
is
popular or more widely adopted as a form
stablecoin
of payment? Yes.
on the Ethereum chain, USDC and Tether.
Okay. And that's probably because of the inherently lower price volatility, I'm guessing.
Yeah, correct. If you're operating a business, we can't be seeing the drawdowns on the underlying asset as we've seen today.
Michael Saylor, chairman of MicroStrategy, now made this tweet not too long ago. Now, as you know, in April, MicroStrategy added another 122 Bitcoin for about $7.8 million. It now holds roughly 214,000 Bitcoins. Michael Saylor also encouraged other companies to hold Bitcoin to boost their company valuations, citing MicroStrategy as an example of one such company that has, more than gained significantly in their valuations because of Bitcoin's price action. Do you think this is a good strategy for some companies to hold Bitcoin on their books in their treasuries?
No, I'm sure that all crypto investors would welcome all these companies to buy up the market for us. Look, I think that a lot of these companies, particularly in the last few years, this post-COVID pandemic environment, the economic principles that we used to govern ourselves by have really been challenged. Leaving cash in the bank and relying on, bonds and typical financial instruments to generate a return, they've been challenged. We've seen banking collapse once again over the last 2 years. We've seen centralized lenders fall. The reality is that we're in a new age, and businesses and CEOs and the likes need to be more innovative and open-minded to different ways that they can secure their balance sheet. And what we've found is that Michael Saylor has really led the way there, and several other companies have followed. Whether that meets the investment thesis of that company, whether that company is a bit dated in their ways, we will see. But I do think principally it's something that should be considered for sure.
Okay. And in terms of which areas in the world are adopting cryptos the fastest, Caleb and Brown is well positioned to answer this question because you have clients all over the world. Which areas are you seeing the fastest crypto adoption based on just your observations and your data?
Yeah. So on our end, we're a cryptocurrency brokerage. So we use a traditional broker service to help empower people who want to invest in the cryptocurrency space.
Yes.
So as a result of that, we've got tens and tens of thousands of clients globally, all around the world. What we find is the vast majority of our clients who have liked our service are in the baby boomer generation. The baby boomer generation in the US is about 50% of the nation's wealth, which is it's a disproportionate amount of wealth concentration. We've actually found a lot of success in empowering that investor class, which otherwise has not really been that interested in cryptocurrency. And what we've found is they've been able to find utility in the assets. They've been able to find investment rationality to diversify their broader investments in cryptocurrency. And through that, they've been able to really participate in this new age. So on our end, we also work with businesses who transact and use cryptocurrency for settlements. I would say that a lot of areas of Asia, areas like Singapore and the likes, have been really quite impressive with how innovative they've been. Europe has also been fantastic. And of course, as a local Australian business, numerous Australian businesses, cryptocurrency related or not, have engaged our services to buy and sell in the space. So this is something that we haven't seen in prior years. And we've seen tremendous growth just from 2023 to 2024 in this kind of innovative adoption.
What's holding the US back from being a leader in crypto adoption? Is it regulation? Is it lack of interest? All of the above?
All of the above. I think you can form an argument for all of those points. In saying that, though, I don't think we should. A lot of people say, "Oh, the US is lacking when it comes to cryptocurrency innovation." I think that a lot of that might be due to the major headlines. Some of the one-liners that you hear from people in politics and so forth might make it seem like the US is drastically behind other areas of the world. I would say on our end, we don't really see it that way. We've got a lot of heroes, if you will, in the cryptocurrency sector, which are born in the US. Like Brian Armstrong is a great pioneer of the industry, since giving out small Bitcoin handouts a decade ago at a conference. These are great success stories. And the leaders of this next bull market that we're currently in, a lot of them are US local businesses, and Asia and Europe, Australia and the likes. We'll challenge that, and we'll try and do our bit too. But I certainly don't doubt the US for a second.
Do you think that with the regulatory crackdowns on cryptocurrency firms in the US, a lot of US firms will move abroad?
There's a probability of that. I think that I mentioned Brian Armstrong before, and I believe he made some commentary about a year ago
Yeah.
on what is to happen to Coinbase if these crackdowns and this witch hunt, if you will, continues. I think that might set precedent, to be honest. I think a lot of these things really come down to a select few multi-billion-dollar companies. If they decide to move offshore, and they will start to set the wheels in motion, and the smaller businesses tend to piggyback on the policies, processes, and actions of the bigger businesses. So I think we'll see a lot of that over the course of 2024, and we'll see how we go.
Well, there's heroes, there's villains, there's everyone in between in the crypto space. Sam Bankman-Fried, who's now in jail, one could argue he could fit into either category. But one could not also deny that post FTX and Celsius, a lot of regulatory attention has been placed on the crypto sector. But not just that, Jake. A lot of retail clients are now skeptical of putting their money in crypto brokerages like yourself. Can you convince the public that not everyone is like FTX? What separates an FTX from a legitimate company? How can we tell?
Yeah, for sure. No, it's a very good question. And, on my comments before about the heroes in the US, you're completely correct. We have the villains. The best and the worst are in the same ecosystem here. Now, with respect to your question on how do you know who to trust? Track record is definitely something that every industry sees. So for Caleb and Brown, we started in 2016, and a quick Google will see that we're flooded with 5-star reviews on every format. Beyond that, you look at the infrastructure and the reality of working with a company. Now, if I invest with a company and I want to get a withdrawal and I can't withdraw coins and I have to lodge a support ticket, personally, that's not going to empower me to invest particularly large amounts in that platform. So what we've done from day zero is Caleb Brown was born on the basis of a whole bunch of us in our own rights having so many friends and family members saying, hey, Jake, can you just buy us Bitcoin for us because it's too hard to buy it myself? And then through that, we've just extended that ethos of helping the local community. We've just extended that at scale, to having tens of thousands of clients now. So on our end, when someone deposits or withdraws from us, it's 24/7 customer support. That's what we obsess over. So at no point in time is no one picking up the phone, replying to your email, or willing to meet you in person to discuss these matters. And I think if investors look at platforms and they look at things, can I withdraw off this platform? Are there withdrawal minimums? Are there withdrawal maximums? These are the kind of questions you want to ask. And you want to ask these questions before you engage with these businesses. People neglected that over the last few years when we were in bull market hysteria. And regrettably, a lot of people now wish that they read the fine print on some of these platforms that they used, or realized that they had to do enhanced KYC to get that larger withdrawal, which they now can't. And now that exchange is going bust. So reading the fine print is certainly what we're seeing more and more these days, and we're encouraging that.
Well, how do we know that? Let's just take Caleb and Brown, for example. You're not using the client's money to fund an offshoot hedge fund run by your girlfriend.
Yeah, no, it's a very good question. It's a question that we didn't think people would be asking up until recent years. What's really critical with CMB, our business, is we put our money where our mouth is. If a client says, hey, Jake, I'm at the golf course, I need to capture this volatility, I'm sending you a wire of $100,000 and I want to buy the following 10 coins. We actually execute the order of those coins before the funds settle in our bank account. So the way that we work with clients is we put our own capital at stake, and the clients are effectively paying us back after we've already made the purchase and those funds arrive. And in the case of that example, which happens every day, clients can already have their addresses whitelisted, their withdrawals are ready to go. So the second those funds clear, those coins go out and we both enjoy our day. So the client is not exposed in that sense. It's actually Caleb and Brown who's the one who could be scammed in that example there.
If every client at Caleb and Brown wants to withdraw at the same time, would there be enough reserve to facilitate that?
Yes, absolutely. And as I mentioned, we've operated since 2016. So we've seen plenty bear markets. We've seen drastic crashes in the market, you name it. We have our own company operating capital, and we're a very well capitalized company. We're still a private company, but over the years, we've always put client security and longevity first. And as a result of that, we have our own liquidity for all trades. Our company operations are completely segregated from any client assets. Every client has a unique vault with us. We're not conflating client assets together. And we've never said no to a withdrawal unless, of course, we think the person on the other end of the phone is a scammer who's stolen your phone. And of course, we have the security processes to prohibit that.
Generally speaking, do you advocate for a system whereby clients or third-party auditors can very quickly and transparently audit or observe the number of cryptos in reserve?
Yes, I do subscribe to that, and I'm interested to see how regulators tackle that as time goes on. I think transparency is going to be key for businesses that want to succeed in the years to come. There are probably lots of businesses out there who might be working as cowboys still, and they may have not been caught out. And it's important for us investors to make sure that we're not one of the ones that get ourselves involved. So on our end, everything's on chain, and that's a great thing. If a client sends us Bitcoin, they can see that it's a unique vault generated just for them. And if they have that Bitcoin withdrawn, they can see that as well. So I think that at the end of the day, it's actions speak louder than words. On our end, we encourage clients to take self-custody, although we can custody assets for them. We don't provide any interest. There's no loan agreements. We don't do any lending. It's very stock standard traditional broker business. And we work with third-party auditors ourselves for our own financials as a regulated Australian business. And we hope that all businesses work to operate in such a framework too.
Well, proof of reserves is where I was getting at. So starting last year, it was a popular concept. A lot of exchanges were promoting that. One such proof of reserve concept is a Merkle tree, whereby it's basically an anonymized proof of client balances that's maintained by a third-party auditor. Is that something that Caleb and Brown uses, or do you have another system where you can prove your reserves?
We haven't really been challenged. So clients, they don't really challenge us on our reserves not because of the lack of doubt, but principally because if they're taking custody of the assets themselves and they were able to purchase the assets before funds cleared on our end, that action in and of itself validates, hey, your broker's definitely not speaking a lie here. In saying that, though, we do and we have worked with third-party auditors and generated reports. That's been historically to satisfy the regulatory interest and the corporate governance side of things. And it is something that we want to bring to the table with clients. It probably won't be through a Merkle tree as such. It'll be more of a traditional approach. It really just, honestly, it all depends on what the regulators require from us, because at the end of the day, that's who governs the way that we distribute information. And they're the parties that we need to appease at the end of the day.
And the clients own their own keys or not?
Once we withdraw coins to clients, a common process is, I'll take that example of the client at the golf course before. In that scenario, we'll help them walk through the process. You want to set up a ledger, a Trezor, whatever kind of custody you want to work with, we'll help you through that process. We'll send a million tests, if you will. We'll take the late night phone call. You've got 24/7 dedicated support with numerous people having full context over what you need. So in that scenario, if a client says, hey, Jake, I really just want to hold my own assets here, not your keys, not your coins, I'm thinking that is fantastic. Let's make that work for you. Let's help you make that as secure as humanly possible. And then we'll get the coins out to you right away. We just want to make sure it's tested thoroughly and you're confident. We have other clients who might say, hey, Jake, I'm looking to just leave coins with Caleb and Brown because I've worked with you for years and I really love your platform. And by all means, we have the processes in place to protect those assets. And if they ever change their mind, there's no strings attached. We can withdraw millions of dollars of any given coin to you right away in a handful of minutes. It's not an issue.
I'm always curious as to how brokerages select their inventory to work with. So there's thousands and upon thousands of cryptos out there publicly listed. I'm assuming Caleb and Brown doesn't have all of them in stock. How do you choose then which ones to offer?
Great question. Says there's a lot of things. We don't trade privacy coins as one example. There are some coins which are just simply far too illiquid or risky for us to be able to trade. The infrastructure of some coins makes it very difficult to custody, because once we purchase that coin, we've got to custody it for the client before we withdraw it to them or continue to have that custody. So what's critical for us is if we're listing a coin, we need to be willing to know that if something goes wrong there, the financial obligation to make the client whole falls on Caleb and Brown as a regulated company operating out of Melbourne, Australia. So they're the things we need to consider when our operations team lists coins. In saying that, we list hundreds and hundreds of coins, and we can pair all of them together. So what's really exciting in this market is a client might have made a lot of money on a very speculative altcoin. We could have that traded in a corporate structure directly into other altcoins, directly into euro, Canadian dollars, you name it, as one transaction, which saves clients having to go through several exchanges, slip the market 5 times, and risk getting a fairly unsavory financial outcome. What's critical to note here is we operate on an agency model. So we're incentivized just to get really good executed outcomes for our clients. We make a transparent transaction fee. And if a client does a trade and they know that Caleb and Brown's fee is, say, $100 as an example, that $100 has to cover every cost involved in the process. So there's no price premiums, there's no slippage, no withdrawal fee at the 11th hour. And we just find that ensures really sound relationships. And it means clients who would otherwise be potentially alienated from cryptocurrency investing are now empowered, because a lot of high net worth, and particularly of the baby boomer generation, they do require that really solid white glove service that we offer.
And ultimately, how should a brokerage firm like Caleb and Brown screen for projects? Obviously, you've heard of many people getting rug pulled, many scam projects that aren't legitimate. How do you evaluate whether or not a company is legitimate? How do you do the vetting process for the clients?
Yeah, well, we have a fairly complex vetting process that our operations team run. It covers everything from the legal aspects of the project. We do due diligence on the founders. We look at the token supply. There are so many different variables we consider.
What are some major red flags for you, just even for as an investor yourself? If you're picking
I would
up
say if a project has anonymous founders in this day and age, that's typically quite a red flag. If it's got anonymous founders and you've heard about it through a hysteria of tweets online, there is a good chance that that pump may not be sustained if it is in fact doing well. I think that anonymity has its value, and I'm certainly an advocate for privacy in many senses. But if you're doing a capital raise for a project, I think that privacy is something you may have to forfeit to an extent in order to win over the confidence of your investors. So with a lot of altcoins, we have had to reject them on the basis of saying to clients, hey, I know you want us to list this coin for you, but the token unlock, the fact that the founders hold such a large percentage of that unlock, anonymous. And what happens is we simply help educate the client and we help lead them to making a more sound investment decision. So it's a win-win.
Is a pre-mine more risky for you? Let's say a project already before release has a pre-mine and the founders, not anonymous in this case, own a large percentage of that. Does that change your criteria at all?
It's definitely something that is material. It's certainly something that the team will consider. It's a case-by-case basis. If a coin has existed for a long period of time and it's been able to demonstrate that it's solving problems, if it has sufficient trade volumes, it can be custodied and whatnot, then it's likely that we'd be able to list it. Now, what often happens is if we list a coin, it doesn't by any means mean that we are an advocate for that coin. Our job, we're a broker. Our job is to allow clients to have the technical resources that we have on our end so that they can engage with the space without having to stress about having 17 different wallets, 12 computer monitors, and their passport flung out across 7 exchanges around the world. If they want to purchase a meme coin, for example, their broker is going to tell them straight up, this is what the project actually does. And if they say, you know what, I know that, but this is my investment thesis. This is what I want to do. It's my capital at the end of the day. And I believe this narrative is going to ride out for a week. And I'm going to take some profit. If they understand the risks involved, our job is just to make sure it's a secure, seamless transaction, best pricing possible, and we'll move forward accordingly.
What sets you apart from the myriad of different exchanges out there?
I think the main thing that sets us apart is our obsession for customer service. We've found that the cryptocurrency space is primarily something which is a part of the technological revolution of the 21st century. So a lot of people think that the crypto investor is going to be, a teenager, someone in their 20s. They've got all their computer screens up and they're very tech focused. Now, largely that has been true, and a lot of innovation has come from that millennial audience. What we've also found, though, is if we really want the cryptocurrency space to blow up and explode in adoption, we need all walks of life to be able to engage. And what we've found is a lot of our clients who are very, very busy, often very high net worth. They operate using complex corporate structures. They want their lawyers, their accountants across their cryptocurrency dealings. These exchanges don't have the capacity to dedicate that support to the client. On our end, every client's got a dedicated brokerage team. Every client has got dedicated traders who manually have oversight over the execution of all trades, which enables us to get more favorable pricing, pair all these assets together, and not have trade maximums, and not have outages during times of market hysteria. So our job has really been to separate ourselves from exchanges in providing the most premium solution for people who want to engage in the space. And through that, we've found that we've unlocked this new investor demographic of the baby boomers in particular, who are thinking, damn, I like a service like Caleb and Brown. It's not stressful. I get a great price on my assets and I can enjoy my day.
Can we trade the ETFs on your brokerage account?
We don't trade ETFs. So we offer quite a variety of complex trading in terms of, stop limits, et cetera, et cetera. However, and we can offer that for a lot of coins which don't have that in any exchanges as well. However, we don't trade ETFs at this point in time. But most of our clients, they're not as interested in.
Is that something you're planning to change or add?
It all comes down to what our clients want. So we speak to our clients every single day. We get that feedback and we build the products that they want. If our clients turn around tomorrow and have an overwhelming interest in ETFs, I can assure you that we'll have a move towards that.
That's interesting. Okay, so who are the clients asking for ETFs versus the clients that you work with? How are they different?
A lot of our clients, they're quite empowered in the space because they've got a broker they can speak to 24/7. They're able to they read the headlines, they sense check it with their broker, they share ideas. We publish our own research as well.
No, but which types of investors are more drawn to, let's say, an ETF product versus the underlying just spot Bitcoin?
I think a lot of them might be the same. I think it really just depends on how hands-off they want to be. If someone just wants exposure to Bitcoin through a traditional vehicle, the ETF solves a lot of problems for them. A lot of our clients, they want more than just Bitcoin and they want quicker liquidity. They want to be able to move in and out of it a lot faster.
Okay. And do you also offer a wallet, or they have to have their own wallet?
No. So we're a custody solution too. We partner with Fireblocks and several other firms to offer an unparalleled custody solution, which to date has never had a single cent compromised. And we've operated since 2016.
So how do you see the crypto brokerage industry evolving into the future with the advent of new technology, new products like the ETFs, for example?
It's a good question, and it's a question we're asked quite a lot because the brokerage model is something that's more traditional, and cryptocurrency is something which is more new. What we're finding is there is a crossroads where there's value from the old and value from the new, and our job is to find ourselves right there in the middle. So we get the best of both worlds. I think as more high net worth individuals engage with the space, and not just that, because we don't only work with high net worth individuals, if people want to invest in the space and they just want to be hands off, they don't want to be overwhelmed with the technological advancements. They don't want to have the risk of signing the wrong contract or dumping the market because they sold in a liquid altcoin in the wrong format. Then a brokerage solution solves a lot of those problems. I think that the world naturally, every industry has got premium models. The difference between standard banking versus private banking is something that we're often used as an example for. And I think that more brokerages will come about over the years as a result of that.
Well, the biggest counter argument to the brokerage model is the rise of DEXs, decentralized exchanges, especially people in the crypto world. Why would I, if I were savvy enough to use a DEX, need a crypto broker? Why can't I just transact peer-to-peer without a middleman?
Well, what we find is a lot of clients do both. And we encourage clients to do so. There are clients who use Caleb and Brown for certain transactions, and they might use a DEX for other transactions. For example, if someone's got some Ethereum and they want to swap it directly on Uniswap, as an example, into another altcoin, if they've got custody of the assets, go for it. Familiarize yourself with the technology that you're investing in. I definitely agree with that. But in the same note, if someone's got a corporate structure and they're holding a significant amount of, say, Uniswap token, as an example, maybe that's what they traded into. In that scenario, if they're looking to sell that into British pounds, US dollars, and have it wired to their account, if they're sitting on a large sum of capital, they're going to have to go through several trades and several withdrawal processes to get from the Uniswap tokens in their wallet all the way through to British pounds, US dollars, Canadian dollars in their corporate bank account. And we just make that process more seamless and more cost effective as well, because it's one transaction.
How do you think banks will evolve or adopt crypto going forward? For example, I can't go to my bank, TD which is based in Canada, Toronto Dominion, and buy Bitcoin using my fiat, or the other way around. I can't get a crypto loan. I can't offload or on ramp into Ethereum if I wanted to, right? These are services that perhaps Caleb and Brown and other brokerages provide. When are they going to, two-part question, when, if they are going to do that, do you think they're going to start adopting these services? And second part of the question, why aren't they doing that already? If they already have the talent, the manpower, the infrastructure and tech.
Great question. I'll go back to front there. So I think that to your second question, why are they not doing it? Well, I don't think they want to do it. The principle here is that if people are investing and engaging with cryptocurrency, they're using a crypto broker, they're using exchanges, DeFi protocols, maybe they're even lending on these DeFi protocols. In that scenario, that is a categorical outflow of wealth and assets from the traditional banking system into this new age cryptocurrency ecosystem. That is objectively bad for the banks. And that is not something that the banks are going to have a liking towards. So they're not going to be particularly fond of the cryptocurrency investor and the businesses supporting that. Now, so that's why they're not getting involved now, because they don't want to get involved. It's shooting their revenue directly in the foot. However, your first question, I think they will get involved. And I think they'll have to be involved as a matter of not innovate or die. It's not that black and white. Cryptocurrency is great, but it's not the end of fiat currency, so to say. The principle, though, is that if you don't get involved and embrace new technology, there are other banks and other organizations around the world that do. And some of the traditional banks in Canada, the USA, and Australia, for example, they're very traditional in how they operate. But then if you go to Europe or if you go to Asia, you see some fantastic innovation there. So it will stifle growth, in my opinion, if people are not willing to explore and innovate with new asset classes. And I believe that the banks will be facing that. And I think they'll solve that problem in due course.
I spoke to Thomas Honig recently. He was the vice chairman of the FDIC between 2012 to 2018. And I asked him, if you were still director or chairman of the FDIC, would you insure crypto banks, exchanges, brokerages, and whatnot? And he said, now we do know that several of the crypto banks, if you want to call them banks, holding companies, FTX, Celsius, failed, and most people aren't getting their money back because those deposits, those crypto deposits, aren't FDIC insured. If you were still director of the FDIC, would you change that rule? Would you insure crypto banks?
Absolutely not. I think cryptocurrency is it is a asset that people, just like the stock market, it's an asset that they're engaging in either because they think it's better or they're speculating in it. And I don't think they should have any backstop from the government. It is a private enterprise. I acknowledge, and I have no problem if they want to get in that business, that's theirs, but know that you can lose your money and no one will bail you out. And if I were the FDIC chairman, I would make that explicitly clear in the public domain.
How would you respond to this?
I think that the governance that cryptocurrency businesses should have should not necessarily be eye to eye with the governance that traditional banks and that sector should have, because it's a different technological instrument and it should be treated as such. As an example, like what we've done as a company is, and I can say this, at any point in time, Caleb and Brown's counterparty exposure will be a minute amount of our company capital. And we intentionally have these internal ratios because it means if anyone collapses around us, or if there is any issue with our third parties, that includes banks, by the way, that includes banks. I'm not even talking cryptocurrency counterparties. Then we know our customers will always be whole and we can always continue our operations. And we've done that because whilst we've been profitable over the years, we've been able to ensure that we can use that to capitalize a more safe business operation. Now, what I think will happen in the coming years is I would like to see there be actual law and governance surrounding precisely that, like an equivalent to what they have in the banking sector. Should it be one-to-one? I think it should be one-to-one in principle of ensuring consumer protection. That should be the underlying motive here. But in reality, dealing with Ethereum, Solana-based tokens, DeFi protocols and whatnot, we can't see that eye to eye as a bank that's holding traditional assets that have existed for hundreds of years in fiat currency.
Okay, perfect. Thank you very much, Jake. Where can we learn more about Caleb and Brown?
Jump on our website. It's no cost in having an account with us, and there's no cost in speaking with us. So any questions, just chat with us directly. And whether you want to work with us or not, either way, we're here to help.
We'll put the link in the description down below. Make sure to follow Jake and Caleb and Brown down there. Thank you very much again for your time. I hope to speak to you again soon.
Thanks, David. Likewise.
And thank you for watching. Don't forget to like and subscribe.